Right now, we're looking for a very small gain for the Dow when business opens, and it is now open. It's 9:30 Eastern Time. Here we go. Let's see now where we are in the very early going. We're up by what? 24, 25, 26, 27 points. Let's call it a 20-point gain. That is a fractional gain for the Dow in the very early going. Opening moments, a fractional gain. S&P 500, where is that? It is up 0.06%, fractional gain. The NASDAQ Composite, where's that? Fractional gain, 0.09%. Dead stop this morning, maybe waiting for the Fed. I'm not sure about that. The yield on the 10-year Treasury, 3.10%. How about Nike? Remember, please, it is a Dow stock. That Kaepernick ad, it was supposed to be a hit, and I guess it is. It is not helping the share price this morning. It's down nearly 3%. We'll have more on that in a second. Who's here? We have Shah Gilani, Jack Hough, Liz MacDonald, and Ashley Webster. Okay, Shah Gilani. Do we have momentum in this marketplace right now? Do we have momentum going up that'll keep it going up? What do you say, Shah?
We have a ton of momentum on the upside. I mean, anything you're seeing right now this week is slightly just a little bit of a hiccup in terms of the pullback. It's not even a pullback. It's just digestion of the great moves we've had. So we continue to make new highs on the benchmarks. And the reason for that is that earnings are fantastic. The consumer's in great condition. The economy is growing and profits are there. So that's being reflected in stock prices. The market has plenty more room ahead of it.
OK, so, Jack, it's another of those despite it all days, isn't it? Despite the toxic politics, the market's going up.
Yeah, I mean, what's going right for the average consumer out there? The value of your house is up if you own one. Your stocks are up if you have stocks, and you probably have a job because employment is excellent right now. So the things that matter the most for this market are in place.
I think the Fed is the big story today with regard to the market, but I think the Fed is going to be a little more hawkish. And you're going to say, well, that's going to spook the market because they're going to be raising rates. No, it's because they're so bullish on the economy.
Yeah.
We're trying to get back to normal, don't forget, after years of just cheap money sloshing around. And I think that it will be a vote of confidence in this economy that we're going to hear from the Fed.
Ash is right. Well, they previewed, by the way, for some time, 2.5% will be the handle on interest rates. So I think that the markets already know that.
It's all baked in at the moment.
Yeah,
right.
That's right.
Right. J.C. Penney, they're saying that the administration's tariffs on Chinese goods will raise prices and hurt the middle class. Now, we've heard the same tune from Walmart and from Procter & Gamble yesterday. Yeah. Now it's J.C. Penney. But we haven't seen any price hikes because of tariffs yet, have we? Well, I don't think so.
It's early in the game for the tariffs. I mean, tariffs are a tax on consumers. It flows through in a tax. And it's especially a tax on the middle class and lower income people just because they spend a higher percentage of their income on the stuff they need. So there will be higher prices at these stores. Now, these same consumers, like we said, they have other things going for them in this economy. They probably have jobs. It's, might not be the end of the world for them, but it definitely is a tax.
Okay. Going on in Washington today, not getting much publicity, but executives from Google, Amazon, Apple, Twitter, they're all on Capitol Hill today. And I understand, I don't get this, Jack. Are they asking, please regulate me? Is that what they're saying?
This is, I would file this under calling their bluff, right? So they've been grilled by, let's say older, seasoned lawmakers on the subject of how to regulate this space. And now what they're saying is, all right, if this is something you really want to do, show us a law. Show us a national privacy law. Yeah. What would that look like? And they're handing it over to these people.
But this is an industry that's based on user trust, and they've lost that trust. So I think they look at regulation as a way to regain some trust.
Oh, that's good. Yes, that's right. And the stock is not hurt.
Yeah, Jeff Sessions, the Attorney General, is meeting with state attorneys general now to talk about how to consider whether or not these guys are monopolies and what to do about regulating them.
So today they'll say, show me the law. What do you got in mind, guys?
Exactly.
That's what they're looking for. The big board shows a gain of 27 points in the early going this Wednesday morning. The used car retailer, CarMax, they're making good money. The stock reflects that. It's up 3% this morning, $2 higher. Don't forget oil, around $71.60 per barrel as we speak. Now, you know those credit cards that give you some kind of reward? You get a perk for using them. Free airline miles, for example. Some retailers not happy about this. They say they're getting slammed by the high fees on those credit cards. They want the right to reject them. I don't blame them. Do you, Jack?
Yeah, I mean, what you no, I don't. You know, if the typical fee, the transaction fee for the merchant is 1.5%. I mean, I've got a card in my wallet now that gives you just 2% on anything, no matter what you buy or where. So obviously, they have to charge a higher fee than that. They're going to the merchant for 3%. And there's this standoff now between the merchants and the card companies. They both need each other. Just like I was saying a moment ago, ultimately, this will be passed on to consumers as higher price. You're not really getting 2% as a reward. Come on, it's not a money-making scheme. It's going to hit you in higher prices down the road.
I'm just waiting to see the retailer who says, no, Mr. Varney, you can't use that credit card. We're not going to pay for your perks. What will I do then?
Yeah.
I want to be there with
I want to get back to Shah Gilani because I've got Jefferies. Now, that is an investment firm. They're saying that, that Amazon is going to go to a valuation of $1.5 trillion within a couple of years, literally 2 years. Shah Gilani, that would mean Amazon goes to $3,000 a share within 2 years. Now, you've been urging this tech rally on. Are you saying, yes, they'll get there?
I think so, and I think so easily. I think this is actually a great an analyst's report, and I'm not keen on a lot of them, but this one happens to be right spot on the money. I'm just going to give you a quote from Brent Till. He says that the optionality for new initiatives is not reflected in the stock price. Now, that's a grand statement and hits it right on the head. In terms of what Amazon can do, they've barely scratched the surface as much as they already do. So when you look at something like a company like Amazon, you look at a company like Apple, you look at these tech leaders, they haven't scratched the surface in terms of the initiatives that are before them. So absolutely, I think this stock will easily get there.